the key example that I look at, I'm sure you've probably heard me mention Dan Hanford's name. So he's one of the larger multifamily syndicators, and that's part of his branding. They always wear company shirts and company hats. So we said, okay, we got to do the same thing.
Oh, nice. Yeah, that's a good idea.
Hey guys, hello Jhanel, how are you? Nice to see you on.
Yeah. Oh, good. How are you?
Good. Normally the first few minutes we'll start with some introductions. Well, Carol, I believe this might be your first time also. So for anybody who's been on some of the previous meetings, you may have noticed we rebranded the group a little bit. So there's going to be some changes. And we'll open it up for networking. Why don't we start with who we have, and then we'll get some other people in the fold as they sign in. Carol, do you want to go first and do an elevator pitch? You can go and just give your name, where you're from, what your background is, and what you're hoping to get out of tonight's event.
Yeah, my name is Carol Jean-Baptiste. I live in Charlotte, North Carolina. I've been an investor now for the last 7 months, and I'm hoping to scale up my business.
Great. Okay. Well, we're glad to have you. Is this your first time tonight?
I think so, yes.
Okay, good. Well, nice to have you. We look forward to seeing you back in the future. And Jhanel, I know you've been with us a few times. Do you want to do an introduction?
Yes, my name is Jhanel, and I have been a buy and hold for a little over 2 years, and I definitely want to continue to buy, and I want to grow faster. So just here to grow and learn and network with like-minded investors.
Great. Jhanel, we'll save yours because you're the main event tonight, so we'll give you a special introduction afterward.
Okay.
Jerome, do you want to do an intro for yourself?
Sure. Hi, everybody. My name is Jhanel Lewis. I specialize in digital marketing within the real estate industry. I am also one of your co-hosts, and I'm here to learn and contribute. Jhanel, it's good to see you. I remember I jumped down your throat last time about the camera. I see you are more prepared this time, so I wanted to acknowledge that. Charles, back to you.
Sure. My name is Charles Seaman. I'm also one of the co-organizers of the group, and I'm out of Charlotte, North Carolina. I focus in multifamily syndication and just looking to actively grow the portfolio and to meet people and to network. Well, we'll probably get some more people filling in here. It's a little bit of a different setup tonight, so we may have some people using our old Zoom link and maybe surprised why they can't find it. So hopefully they'll be redirected soon. Mark is also one of our co-organizers. Mark, do you want to do an introduction for yourself and let everybody know who you are?
Give me a minute. I'm just a little bit.
Sure.
All this technology stuff, I've spent 10 minutes trying to get on.
Sure.
So I just check back with me in a minute.
Okay. So normally what we do for anybody who's new on these here, we normally have about 10 minutes of networking at the beginning where we just go around and everybody gets to know who everybody else in the room is. Then what we usually do is we have a presentation. I believe that Jerome may do a quick overview tonight to let you know some of the changes that'll be happening in the group. And then from that point, we'll turn it over to our guest speaker, Jhanel, who's on with us tonight. And then what we do at the end after the presentation is we open it up for questions and answers. And we also encourage people to do a little more networking if there's time. So Jhanel and Carol, being that you two are the guests thus far. So Jhanel, I know you said you're a buy and hold investor, and Carol, I know you said you're in Charlotte, but you have, what did you say, was it 7 years of investing experience?
No, 7 months.
7 months. I apologize. I caught the 7, but
yeah,
soon enough will be 7 years.
Sorry. Oh, I've been doing wholesaling, driving to dollars, and trying to buy and hold. I haven't found anything to hold yet. Then I got one flip going.
Okay, well, listen, 7 months. How many deals have you wholesaled?
This is my first one.
Okay, good. So you have a wholesale and a flip, and that's a good start for 7 months.
Okay, if you say so. It doesn't feel like it to me.
Congratulations, Carol.
Thank you.
Yeah,
yep, the first one's always the hardest.
Some people never get going.
Right.
Well, I'm still working on it, so keep trying.
Stay
I
positive.
see we have
Be
Sandeep
positive.
on. Sandeep has been a regular attendee and a guest speaker. Do you want to do an intro?
Hey guys, just give me 1 minute. I have a newborn,
Yeah.
so moving things around in the house.
Absolutely.
Congratulations.
And how about you, Mike? Do you want to do an intro? Okay, we'll come back to Mark. Mark, are you ready?
Yeah, when you first get on, sometimes it's like it just takes a moment to just get situated here. All right. Well, my name is Mark. I'm an experienced investor. Been doing this for over 30 years, done over 300 deals, houses, notes, apartments, mostly in Texas. I've now branched out to several other states. And actually, I helped Charles get started back, I don't know, what, 5 to 7 years ago now, Charles?
Yeah.
Something like that in New York. And he's in Charlotte now, very proud of him. And geez, you've got what, 4 apartment complexes and over 300 some doors or something? I don't even, I've lost track.
Yeah, five by the end of the week, but getting there little by little.
Yeah, 5 by the week, but who's keeping count, right? And then I remember when I first met Jerome. Jerome's fantastic. Jerome is a guru god now out there with people worshiping. You know, they going like, I'm not worthy, all that kind of stuff around. Even internationally, he's an international rock star stud now, even South Africa, right?
Yes.
All over the world. Jerome started with me too. So in any case, it's been very interesting. It's exciting. We might have a buyer for our property in Wichita Falls. I'm working with an associate that is actually doing an open house there tonight, but we got a potential buyer from Hawaii, sight unseen, for our property. Looks like they might put about $23,000 down, and we'll do a seller finance. So lots of, and then we got the apartment complex we're working on. We got lots of good stuff going on. Would love to talk to anybody who's game. I'll be putting my information in the chat box. So, all right, thanks. We'll keep going.
Okay, great. Well, Sandeep, if you're ready, we'll come back to you.
Okay, sounds good, guys. Hey, so Sandeep, I'm based in Charlotte. I've been doing real estate since like 2009. I just bought another building last week in Charlotte. It's a medical building, like 11 tenants in there. So, and I had my daughter born on Thursday. So the week's been going very good.
Big things.
Congratulations.
Thank you.
Okay, good.
Mike, you're the only one that didn't do an introduction yet. You want to turn on your camera, introduce yourself?
Sorry, I'm new to this, and so
All good.
yeah, my name's Mike.
That's what we
Porter.
here for. Here to help you.
I live in Kansas City area, and I'm just kind of like trying to get into real estate investing. I actually used to be a home builder up until about 07, and then I decided to get out of construction and home building for a while, and I don't know why, but I ended up with a degree in molecular bioscience and worked at KU Med Center doing breast cancer research for a few years. And then, I guess the economy kind of got kickstarted again and things were going well. And I got into, I left that field and I got back into construction, and I started working for a multifamily developer and builder doing apartments. Kind of fell in love with that, and had been working with another developer for the last few years, doing like senior living facilities and mostly like superintending, project managing type stuff. And now I'm kind of wanting to get out on my own and do my own thing because I can't because I can, I guess,
Well, welcome. You're in the right spot. We have a variety of experience on the call, so you're in the right spot. Charles is in apartments. I did like mostly wholesaling, and then we got Mark. Mark does a lot of creative stuff. We got our guest speaker Jhanel. She does a variety of things as well. So you're in the right spot. I saw someone else hop on, Kian, but she's not. She can't hear us yet. It's
I
connected.
think some people might be having confusion how to join because the original Zoom link that I had on my calendar was different than the one. Because when I clicked on that, it kept on telling me waiting on host to let you in. Then I had to go back to the meetup, click that link. It made me register again.
In retrospect, I think, yes, that's probably a good point. I think we were thinking that a few minutes ago ourselves that maybe we should have mentioned that in the promotional material so people realize that.
You might want to put a comment in the meetup with the new link so people
Yeah.
might see it's in.
Yep. Good idea. Going forward, we'll definitely make sure to do that. Okay. So, Keon, do you want, oh, Keon's still connecting. So you know what? Why don't we do this? We'll turn over to our speaker at this point because this is about the time we'd normally do that anyway. So let's give her a nice warm introduction here. Excuse me. Bear with me 1 minute. I'm just pulling up the biography. I'm having some technical difficulties of my own. Okay. Well, we want to thank Jhanel for taking time out of his schedule and joining us here tonight. Tonight's topic is how anyone can start building wealth. The barrier to entry into real estate investing is mainly associated with fear from ample myths and misconceptions. With a lack of knowledge, mentorship, relationships, and even capital, people often believe the door to building wealth through real estate is closed to them. However, with the education to navigate the systems and processes and the discipline to apply those learnings, Jhanel intends to show how there are no limits to what is possible through real estate. In tonight's event, Jhanel will share how anyone can start investing in property with no money down, building her portfolio using the BRRRR method. For anybody not familiar with that, that's buy, rehab, rent, refinance, repeat. Jhanel will guide the audience through the creative and alternative strategies she's used to leverage capital, such as commercial loans, whole life insurance, and credit cards, to own over 100 units. She will also break down common falsehoods so you can get around perceived limitations, such as how you can still qualify for mortgages even with student loans, and how lucrative using Section 8 and other government programs can be. So without further ado, we'll turn it over to our speaker. Jerome, did you have any housekeeping announcements? I probably should have asked that first.
No, we're going to let her go.
Right.
Jhanel,
Okay.
what's wrong? You ready?
As ready as I'm going to be.
Good. Okay.
Let's go. How can I help you?
I'm like over 100 doors. Come on, you rock. Let's go. I want to hear.
Thank you.
One more thing just before we have her start. So if anybody has questions during the presentation, we're going to keep everybody on mute, and just type your question in the chat box or wait till after the presentation is over, and then you can speak to Jhanel and ask her your question.
Jhanel, you need screen sharing capabilities?
Oh yeah, you gotta make me a host.
Okay.
The reason why I kind of freaked out was because all of those things you mentioned are not in this presentation. So I don't know if you guys are expecting all that. Like that would be a lot.
It's a lot. You can't teach everything. And
Right.
so I met you online on Instagram, and people that are further interested, they can check you out online. They can dive into your course, your mentorship, et cetera, et cetera. So we will go with what you have, and they can learn more about you towards the end.
Okay.
You should be able to share your screen. There should be like a green button
Yes.
on the bottom of your Zoom. There you go.
Yeah. So high cash flow real estate investing, that's kind of what my specialty is. I invest based off of cash flow because I believe it is the safest way to invest. I don't speculate. I'm not a big risk taker. Crypto is just not my thing. I have anxiety, so I need to invest in sure things. So I don't invest in anything that I can't evaluate. So cash flow is a good indicator of whether it's a good investment, because if you're buying it cheap, usually the cash flow is pretty good. So my investment strategy is based off of high cash flow, understanding value, assessing risk, leveraging credit, relationships, and systems. It's a mouthful, I know. So this is me. I am a chemical engineer turned real estate investor, and I feel like I produced a process for creating cash flow. Chemical engineers, in case you're not aware, is we make processes. We make shampoos, we make water, we not make water, but we just do all kinds of things that involves a flow, assessing risks, doing analysis on root cause analysis and that type of thing. We have to look at things that are ahead and look at things that are behind and try to fix things along the way. So I've pretty much done that with buy and hold real estate investing. Whenever there was a problem, I looked for a source, located it, and figured it out. So I've been investing for 17 years, and I feel like I know a whole lot of it. A lot of things that people are struggling with, I feel like I have an answer for it. So one of the things I like to clear up is that buy and hold real estate investing is actually a passive business. It is not passive investing like people like to tell you. It's active investing, but a passive business. And this is why Robert Kiyosaki, he often says entrepreneurs need to build their businesses so that they can take that money and invest in real estate, because entrepreneurs would make great real estate investors because it's so much more passive. And the thing about investing is usually just about money and numbers and just being good at spotting, you know, something that's undervalued. But in real estate, it involves people. And that adds a whole new element that people are not familiar with or know how to handle. But entrepreneurs, because they're usually in the people business, you know, servicing customers, providing for customers, they know how to deal with people if they're successful. If they're not successful, that usually meant they didn't know how to train customers or train their staff or deal with customers. So dealing with people equals problems. What type of problems is sometimes they don't have enough experience, they don't know what to do. They don't have enough discipline to know what to do and do what's right. And then some of them just don't have good morals. But this is not all bad, because if you're someone who can spot when someone doesn't have enough experience or don't have enough discipline, you can fix things before they go wrong. And if you're a passive investor and you don't know anything about what's going on, you can lose a lot of money because you're not going to know if someone doesn't know what they're doing. You're not going to know if things are going wrong. You can't even spot if things are going wrong until things are just all the way wrong and you lose your money. So real estate investing gets a bad rap, especially buy and hold, because a lot of people don't know what they're doing. A lot of people think it's passive. They say, oh, you know, you can hire a property manager, you can hire this person for that, this person for that, and they trust them to do everything right. But oftentimes, many things go wrong. Each new person you add into your system, the more problems that you have. So I teach people to actually run the real estate like a business, and that's knowing a little bit in each step. You don't have to be an expert in each step, but you got to know something in each step. And it's good if you have like one strong point that kind of is what drives most of your value, most of your money. So the thing about real estate being a business is that you don't need your own money. And this is kind of how I've been able to be successful, even though I did not have a huge salary. And as soon as I learned all these things, I was able to quit my job. So of course, you can invest with other people's money. If you have your own money, even better. You can scale faster and be able to withstand more risk. But if you don't have money, you can leverage other things. You can leverage your abilities like creativity, if you have good leadership skills, if you're good in tech. Like there's so many things within real estate that you can leverage to build your business and be successful. If you have time, if you don't have money and you have time, you could put in some sweat equity. And it doesn't always have to be physical sweat equity. Like you don't have to be in there painting or doing all, I mean, you can, if that is your skill, you can, but you should leverage that skill and train other people to work under you. There's so many things you could do. So if you leverage these skills, your mental, your physical sweat equity, now I'm using a lot of mental sweat equity more than I like lately, but as you get more money, you get more people working with you, you just become like a manager. And once you know how to do all these things, people throw money at you. Investors like people who can manage their business, manage their money, and are successful. So it is very easy to do this with no money. And then once you get good, you build your network, you get resources, you get more information, you get more strategies, you build more relationships. And my favorite part of investing is taking advantage of inefficiencies. Inefficiencies are everywhere, and they are with people, with computers. And I'll give you a couple of examples when I go through my story, but people take advantage of inefficiencies all the time. And that is pretty much how investors skate through and make their money. Now, about me, I've been investing for 17 years. I got my first property in 2004, and I have built it up to now be a portfolio worth over $10 million, 100 plus units. And I don't flip. I don't have rich parents. I never had any windfalls. Any windfall that I've gotten has been from real estate. I've never had any partners. So everyone, whenever I go on a podcast, people are asking questions, they're trying to figure out what edge I had to get me to a portfolio worth over $10 million. And so I basically told them, I said, well, I mean, I'm highly disciplined. I'm good at math. I know personal finance. And I think what really helped me out was the story of my first property. And what that involved was my dad had a property across the street from my grandmother. It was a duplex. And while I was in college, it was about to get sold for share sale. And I didn't really know what to do at the time. I just decided I would just stop the sale and then go back to school. So I got a student loan at the time, paid off the $5,000 in back taxes. I graduated from school, and then almost a year later, it was about to get demolished. So I didn't want to get demolished. So I heard from officials violations. I got a credit card, cash advance on my credit card, which I don't recommend, but that was all I knew at the time. I stopped that. And then I was at a point where I didn't really know what to do. I didn't know anyone who invested in real estate. Everyone was kind of like, that's the old property. Why don't you get rid of it? It has this problem, you know, walls caving in, there's no floor, any of this stuff. So I was going to sell it. And so somehow someone brought an investor to me, and I'm thinking this house was worth like $20,000, $25,000. I was going to sell it, but he offered me $45,000. And it got me thinking, like, why would this house be worth $45,000? It's a total gut. And so I decided if he sees something in it, then maybe I should keep it. So that's what I did. I kept it. And then I found out about a friend of mine, not a friend, but my mom's customer. She's a hairdresser. She has a house around the corner from mine, and she got a home equity loan by a drive-by appraisal. And they didn't go inside, they just drove past, and she got a loan for $70,000. And I was like, ha, this is the inefficiency that I took advantage of. I painted the outside of the house. I got new doors, new windows. The inside was a total gut. If they had drones back then, I would have been in trouble because they would have seen that it was in bad shape. But I did a drive-by appraisal, and it appraised for $70,000, and I got a loan for $63,000. So this is what I mean when I say, you know, you take advantage of things that are inefficient. Now, there were people back then who would do the same thing, but take that money and blow it. And that happened a lot. It did. So, but me and a friend of mine, we both did the same thing and fixed up our houses. He sold his, I kept mine. But anyway, when I got to the closing table, turned out there were all kinds of liens owed on the property. There was old mortgage, water bills, taxes, all kinds of stuff. Wound up paying another $45,000. So I was already in 10 from my other expenses, another 45. And so I had about 20,000 left over to fix it. I found the same cheap contractor. He fixed it up for me. I mean, we had our regular drama. He stopped working on the job. I wound up paying the guys who worked under him to finish. Once we finished, I have trust issues, and I've always heard about tenants not paying. And I was like, you know what? I'm not going to deal with this. I'm going to write the Section 8. So I was like, I'm going to take the people part out of the equation and get my money automatic first of the month direct deposit. So as soon as I signed them up, I started cash flowing $700 immediately. And I was like, that is what this investor saw. He knew he could cash flow all this money from this investment. And I did it all on loan. I did it using my credit card, my student loan, and the home equity loan eventually. So I did this all with no money, and I made $700. I was like, this is how I'm going to become a millionaire, because I always wanted to be a millionaire. And I was going to do it the old fashioned way by maxing out my 401k, paying off my debt, and I was going to be a millionaire by 65. But with this new strategy, I could be a millionaire a whole lot sooner. So the next thing I did was I bought another duplex with the FHA loan and repeated it. I started cash flowing $900 on that property. And so now that I knew that I had a good strategy, I was going to buy multifamilies. I was going to cash flow between $700 and $900 for each one. And boom, I was going to be a millionaire. But as I progressed through my journey, the next house I bought it for myself, and I thought I could just get another loan. But because of like the way the ratios worked and all these different things, I couldn't qualify for another loan. Now, the first two properties, they paid for more than my current house, and I still had my salary as an engineer. I was probably making like maybe $50,000 at this point, and I couldn't qualify for a loan. I couldn't understand what was going on. So I got more creative, and I started to assume people's mortgages. What they call it now is like a seller or subject to. I did that for my next property. So I assumed the person's loan. It was back when they were doing the subprime mortgages back in 2009. and her mortgage was about $30,000. I gave her $1,000, and I figured I would just pay this mortgage and I don't know, and figure things out because her payments were only $300, and I knew I can get the rent. But her loan was actually awful. She had an interest rate that was about 27%. Subprime loan is from Countrywide. I don't know if anyone was around. Well, some of you guys were around back then investing, but she had so every month, $300 payment, about $17 was going towards the principal. And I was like, I gotta get out of this loan. So I tried to refinance and I could not because I had 4 mortgages at this point and they would not qualify me. I was like, this doesn't make sense. I have a tenant in here. The rent was $850. I had this little mortgage that I needed to pay off and I could not qualify. So I called a friend of mine. He went to a real estate investing boot camp, paid $6,000. I wish I could have went. I didn't have the money. And I asked him, I said, how are these investors getting all these loans with no jobs? Because I went to the presentation. I was like, how are they doing it? She's like, oh, they're using commercial loans. And I was like, what is that? So I went down a wormhole and I realized this new strategy that I could take advantage of, which was using commercial loans to refinance out as long as the property cash flowed. And my properties cash flow great. You know, I get 700 on the first one, 900 on the other one. This one was a single family, so it was a little less, but I qualified easily. I got appraised and appraised for all this money, and I got extra cash money out. So this was the beginning of my birth strategy. It didn't have a name back then. This is what I started doing. And when I bought that house, I fixed it up with a credit card. This was in 2009. It was after the crash and the government had started to, drop interest rates to spur the economy. So because of this, my credit cards back then, they kept sending me these 0% offers. And one day I decided to call. I said, what is a 0% check that you guys keep sending me? And they said, well, you can just take the money and put it in your bank account and do whatever with it. I was like, I just put it in my bank account and just do whatever. She was like, yeah. And at that time, my limits were like 20,000 on my Citibank, 20,000 on Bank of America. And back then in Philly, you could buy a house for $20,000. So it birthed my new strategy of buying houses with balance transfer offers on my credit card. So that next year, I got credit line increases on all my cards, and I bought 3 properties with cash advances, or not cash, with balance transfers. Then I refinanced with a commercial loan and started getting that cash out with those 3 properties, $100,000. The next thing I did was I met some wholesalers. I didn't know what wholesaler was. They were like, yeah, I got these properties off market. I started getting cheap properties just from knowing these wholesalers. And because I knew that I was closing with cash, with my credit card, like, yeah, I have cash, but it was just as good as cash. And then the wholesaler introduced me to a hard money lender. And then everything really started to take off. Once I got the hard money lender to finance my purchases and I paired them with the hard money loans with the credit cards, I refinanced with the commercial loans. That is when I quit my job. This was in 2012. At that point, I started pairing my down payment with a credit card because a hard money lender, they don't source your funds, your down payment like they do with FHA loans. It was much more easier to get approved. They approve you based off of the asset, the property, the value of the property, and they approve you based on your ability to fix it up. So because I had this experience with these other properties, even though these triplexes were bigger, they allowed me to get the loans, and then they cash flowed great because we're multi-units, guaranteed rent through Section 8. All my properties were Section 8 at this point, and I got approved very easily. Then I discovered that for some reason, triplexes sold for very cheap. I could get triplexes back then for like $50,000 to $90,000. The first one I got, it appraised for, when I finished it appraised for $300,000. I thought this was a mistake. I was all in about $100,000 and it appraised for 300. And so this was like my biggest windfall ever. And the next thing I did was I bought 2 more triplexes. And after I cashed those out was when I really quit my job, because I discovered a new like hidden gem of buying triplexes in West Philly. People were selling them for dirt cheap, but for some strange reason, they were appraising high. I mean, the appraisers were taking comps from like University City because there were none that had sold in the area that looked like mine. So it was like another thing that was not efficient that I was taken advantage of. You know, these appraisers that comped me based off of other neighborhoods. So even though people in the direct neighborhood is like, you know, those houses ain't worth this or that. Hey, if I could get an appraisal that says it's worth $300,000 and Section 8 is paying me, oh, there's another thing that I discovered. Section 8, I hacked the algorithm for Section 8. Whenever things are determined by a computer, you can hack it, almost like with Instagram. Once you know what they like or what they look for, you can just do those things and figure out how to make it give you what you want. So with Section 8, I discovered that if you have more amenities, if the condition is good, they give you high amounts of money. Now this is back when they took an average of the whole city. So I could get the same amount of money for a 1-bedroom in the hoods, West Philly, that I could in Center City. So once I discovered that, I was going ham on making sure I had all the amenities. I was putting microwaves, window air conditioners, refrigerators. I asked them, I said, which amenities pay the most? And they told me. So now, even though I was paying a little bit of money for these houses, people in a neighborhood, they usually would rent a house for rent an apartment for $700 for a 1-bedroom. I was getting $900 for bedrooms, 1-bedroom apartments, guaranteed money. So it was just like it was a crazy amount of things that were not efficient that I was benefiting from, and other people did not know because they don't like Section 8. There's all types of misconceptions. So I was dominating in the Section 8 market, getting all this money from triplexes getting sold to me cheap, appraising high because they're appraising from the next neighborhood over, Section 8 not knowing what neighborhood my place is in and give me the highest rent based off of the amenities. So all these different things I'm taking advantage of, and I'm putting it back into reinvesting because at the time I had no kids. I didn't have a lot of needs. I was just putting money right back in. I would refinance $100,000 coming out and I would buy 3 more. So that is how I did it. It is not because I had a high income. It is not because I didn't even have rich parents. I lived with my grandmother. I never had any partners. My partner was my hard money lender. My partner was my credit cards. I never had anyone in my family with money. The couple that did would never have trusted me to borrow anything from them. So when I would hear people say, yeah, invest in real estate, ask your uncle, your parents, all these different people to borrow money from, I'm like, I can't do that. So I found credit cards, and they are, even though people are like, credit cards are bad, but it depends on how you use them. I was using them to make money with them. I was leveraging them. I was leveraging 0% balance transfer offers for a year. I had a whole year to fix up these properties, and I didn't do any of this until I had a good crew, which is a whole nother story. But once you find an area, find a niche, find things that are not efficient, you take advantage of them. Now, eventually, those kind of loopholes closed. Not the triplex thing, that is still very valid. I bought 8 triplexes last year. No, I bought 9. No, sorry, I bought 11. I bought 11 triplexes last year. 7 of them were $150. When I refinanced, they appraised for $320,000, and I didn't put a whole lot of money into them. So that loophole, whatever you want to call it, that part of the market is still an opportunity. The Section 8 one closed a little bit, but I still use it because I really love the guaranteed rent. I don't have to chase people down for money. I get anxiety if I have to call someone and be like, where's your rent? So I have been able to sleep at night through COVID. I've been able to pay my bills. I didn't have to put anything in forbearance. It has really been a blessing for me. I was able to take advantage of so many opportunities last year because other people couldn't get funding, because banks were shutting down. Banks weren't really giving loans because, we didn't know what was going to happen with COVID. As soon as it happened, guess what? They were doing drive-by appraisals again. And I got 2 of them. So there is opportunities everywhere. Whenever there's something new that rolls out, There's going to be things that are not efficient. You kind of go ham on it. And then eventually, once they realize that something is not going right, they start to fix it. So there's always things that are not right. I heard about something last week that we can take advantage of. So it's about being in it. You got to be in it in order to see these things and take advantage and keep your mouth shut and make sure you don't take advantage of people. You can take advantage of systems and get wealthy in real estate that way. How much more time do we have? Plenty. Do we have any questions? I don't really have much more to say after that.
Keep going. This is fantastic.
I have some questions based on what you gave us, and
Yeah.
I want to kind of get into some numbers. So
Mhm.
I wrote down some notes here. And can you walk us through, like you mentioned the numbers and you mentioned like a little bit of numbers, but let's say, for example, to kind of hone it in, your
Yeah.
first triplex or your first project, can you walk us through some of those numbers and walk us through that
Yeah.
project a little bit?
So that was my first time meeting a wholesaler. And I don't know what happened. Someone passed away. They had all these properties. The triplex I bought for $19,000. It was a total gut, but at this time I already had met my contractor. I tell people don't take on any full gut renovations unless you have a contractor that you already know, like, and trust, and you've worked with them on several jobs already. That is a huge risk that people don't consider.
So it was a triplex,
Yeah,
and
my
it
first
was, do you remember the ARV, or did you use another analyzation? How was that?
So back then, I kind of just did a rough thing of like 30,000 per unit.
Okay.
And I pretty much put in about $100,000. And then I assumed the ARV would be like 150. I had no idea it was going to appraise for 300,000.
Okay. And when it appraised, did they, because different people appraise different, like houses differently. Some
Yeah.
people, and I know that triplex is still multi-unit, kind of, and you need like comps, but sometimes you'll just go with the cash flow analysis. How did they analyze or give you the value on that property?
So I've never had anyone do cash flow analysis on any of my properties. They've always been by comparables. I think once you get to commercial, they might do it that way, or just the lenders that I use don't do it that way. It's always by comparables. So I was surprised by that ARV of 300,000, and immediately I bought two more down the street from it just to see if it would happen again, and it did. So it wasn't like I checked to see if it was a fluke, and it wasn't. So I bought the other two triplexes. One was 60,000, and that was a lot for me. I never paid $60,000 for a house before. It was a lot, and I was scared to tell people. The second one I got at share sale for 28,000. That was a steal, especially because those two would appraise for 300,000. I was like, oh my god. So they were all taking comps from like two cities, from two towns, not two towns, but two areas over, because not a lot of people sell multifamilies. People didn't really start selling multifamilies until they were house hacking, and the value of them went up. It was mostly investors buying these properties. We don't pay a lot of money for properties. So until people, well, I mean, these are viable because they were comping ones that were from next to the schools, Drexel and those other areas. That's why they were using those for comps, which is why those appraised high. But now I think they're appraising high because people are house hacking and people are more being emotional buyers. So that's driving up the price of multifamilies now.
Okay. My next question is, it's kind of a general question, just so we can clarify for anybody that's watching later or something like that. But could you talk about, you said commercial loan, like I know what a loan is, but what do you mean when you say commercial loan?
Yeah, so some people believe that commercial loans are only for commercial buildings, like apartment buildings or something that has a store in it. But that's not true. You can get commercial loans on single family houses. They use cash flow analysis because I am running this as a business. This is a business, so I can get commercial loans as long as the business can support itself. The business is what supports the loan, so it has to cash flow a certain amount. They use what's called debt service coverage ratio, DSCR, I think. So they want to make sure it's enough money to service the loan and give you some money. So the loans that I use, they require 1.25. That takes into account all the bills. They take into account the real estate taxes, insurance, maintenance, vacancies, all of these things go into account. And then they want you to make sure you cash flow enough. Now, because I invest in mostly multifamilies and I'm at Section 8 and I hack their little rent thing, I get high rents, high cash flow. Other people who do not rent the Section 8, might have a triplex next to me, are getting less money in rents. I'm getting higher rents. So because of those cash flow numbers, I am able to get commercial loans. And my lender actually likes the fact that I'm at the Section 8 and I get guaranteed money because they feel like it's less risk. I have met other lenders who will not rent or who not refinance me because I'm at the Section 8. That might be because not everyone knows how to work with Section 8. They don't know how to manage the tenants. They don't know how to work with the agencies, which it does require some skill. Not everyone can do that. They don't know how to screen their tenants. They think just because the rent is getting paid by someone else, so they don't have to screen, but you still have to screen to make sure you're putting responsible, reliable people in your properties. But because people don't want to use Section 8 and I know how to use it efficiently, I can maximize the property in value because of how much money it generates. So I can get commercial loans.
Okay, thank you. So when I asked you, Sandeep, oh my God. All right. When I asked about like the ARV on the properties, you were like, I went by, you gave me like I don't know, like it wasn't an answer that I'm used to, right? So my question for you is, back then, like you were kind of new and you didn't have a lot of experience. Has your strategy changed since then? And how has it changed?
It hasn't changed a whole lot because I'm still buying a lot of I own at least 30 triplexes. They have been, for some reason, people just don't want to, you know what it is? People spend too much on renovations. I say that people get lost in the details of the BRRRR strategy. You know, the BRRRR strategy is buy, renovate, refinance and repeat, or rent, refinance and repeat. People get lost in the renovation part. They feel like you got to make it fabulous, but you don't. You just got to make it rent ready. So you don't have to do a full gut. So a lot of times people will look at a triplex and they'll say, oh, it needs 150,000 worth of work because we're going to rip out everything. But I'm like, you don't have to rip out everything. These are good walls. It just needs a new kitchen, new bath, and new paint, and a good cleaning. So because I spend a little bit of money on a renovation, I can pay 150 for a triplex, whereas they don't want to pay more than 100. So I'm able to take advantage of a lot more opportunities because I know how to rehab and because I know how to maximize the unit to get most money from Section 8. So it's like two things that were not efficient that take advantage of. People who are evaluating properties for a total renovation, they're missing out on opportunity because they don't see the value in this property as is. Like it's like this has all types of hidden value that you're taking out. You're taking out these boilers when they work perfectly fine. So they are missing, like they can't like properly analyze a property and see what its true value is because they just want to rip everything out and start over. So because I don't do that, I save everything that works good. I fix what's broken, and that's it. And I make it look nice, focusing on the things that have a high return on investment, which is the kitchens and the bathrooms. That has always been the case. And then I make sure I put the amenities in there to make sure I get the highest amount of money from Section 8.
Thank you. I have one more question personally, and then I want to open up for the audience to ask questions if they have questions. So that first property that you bought, do you still have that property?
Yes,
It's
I'm a
two-part
buy and
question.
hold. Yeah, so
Okay.
I'm a buy and hold investor. And the thing about my strategy is I hate losses. I control my losses. The biggest loss is taxes. So I don't want to pay taxes. So that's why I don't sell anything. I sold a couple of properties in 1 year and I got hit with the depreciation recapture. I was like, what? I'm not selling any more properties. And those were single families. I was just trying to focus on the multifamilies, but I'm not selling anything anymore because of that recapture. And it's much more easier to manage a tenant than to pay taxes. So I just do a refinance if I want to get the money back out. I'm about to refinance a whole bunch of properties that I bought. Like I bought a lot of triplexes like before I had kids. And once I refinance those after this next set I'm working on, I should be able to cash out like 400 grand. So better than selling, because a lot of people are selling stuff because it's the top of the market. They're selling, they're 1031 exchanging, or they're paying taxes on it. I am refinancing. I'm keeping my properties. They're still cash flowing great because the interest rates are so low. I'm paying almost the same amount as before. So I'm paying the same amount because low interest rates. The values are sky high, and they still cash flow great because of the high rents that I'm getting from Section 8.
Okay, thank you. And so part two to my question is, that was when you first bought the first one, that was how long ago? Was that 17 years?
Yeah, 2004.
Okay. Is the value still the same, the ARV,
Of course not.
or has it appreciated?
um,
Right. Can you tell
so
us what the difference is?
So I'm very conservative in my numbers. I
Mhm.
will conservatively say 150. If you would ask another person who, I don't know, they would probably say it's worth 200, but I think it's worth between 150, 180.
Okay. So it has appreciated.
Yeah, it's tripled in value.
Perfect. All right. Thank you so much. So here's what we're going to do. I'm going to stop asking my questions and I'm going to pass it over to our audience. Carol, I see you have a question in the chat room. Please open up your microphone and talk to the speaker directly so she can address your question.
Should I stop sharing?
You
Oh,
can stop for a while and then we'll bring your slides back up. Carol?
Yes, yeah. I was asking on those credit cards, at the 0% credit cards that you use, did you have to make monthly payments on them?
Yes. Yeah. So what I tell people to do is take enough off the card that is enough to either pay your down payment or do the renovation. Take off enough to also make the monthly payments. So if you're buying a house and you're spending 40,000, take off another 10 to allot for your payments. Or if you're using a hard money loan, make sure you build it in somewhere so that you're not paying. It's not coming out of your pocket. Make it
Okay,
come out
but
of the credit card or your hard money lender's pocket or the house's pocket. Make sure it's not coming out of your pocket.
yeah, the maximum on my cards is $10,000.
Yeah, call and
So,
ask for increase.
okay.
And
Because
Jhanel, you have a course that teaches that, right? You can talk about
yeah,
that. That's an
so
opportunity.
because everyone kept asking me about the credit cards, I'm like, I want to talk about real estate, not credit cards. I made a course where I teach you all about business and personal credit. I just saw a lot of misconceptions that drive me crazy about what people are teaching out here. I teach you how to get high limit credit cards, how to apply for them. There's like a strategy to apply. There's a strategy to get high limits. There's a strategy to getting commercial business lines of credit. So I tell you how to do all those things in the course. And I tell you how to pair them with all types of loans, FHA loans, hard money loans, and how to use them to buy real estate and exactly how to like calculate your payment and be prepared. I'm a planner. I have anxiety, so I don't like uncertainty. So I plan out everything. I would not use credit cards or hard money loans if you are working with a contractor that you do not know, because you don't want to have the project be drawn out, have issues after issue, have to fire him and find someone else. So you have to run a tight ship when you are using a hard money lender or credit cards. You have to be in and out. You have to know what you're doing. You got to be on your job site, make sure things are getting done. Just remember, this is a business. You have to be involved in your business. But a lot of the work is up front. Once you renovate your house, get it in cash flowing, that is done. You're getting cash from that property and then you move on. After I finish my properties, I don't really plan on buying a whole lot. I'm going to hit my cash flow number that I've been working on, and it's going to finally be kind of passive for me. It's not a passive investment, but it's a passive business. I'm not going to have to do the day-to-day anymore, but the work is just upfront and managing your renovation or sourcing deals. That's also a way of working upfront. So as long as you stay on top of your jobs, you can use credit cards and hard money loans.
Thank you, Jhanel. Sandeep, I saw you had your hand raised. You can open up your camera, your microphone, and ask our speaker with
Hey,
a question.
thank you. And Jhanel, loved your story. I mean, it's awesome. And you mentioned like Section 8. I mean, like, are you actively managing your properties, or what's the geography on your properties? How far spread out they are? How do you manage your properties?
So I'm in Philly. All my properties are in Philly. I use a property management software. I have tried 5 different property managers and they're all idiots. I feel like they don't understand business and they don't understand tenants. They don't, and a lot of them don't like Section 8 because they don't understand how to work the agencies. So I decided to manage them myself by using a property management software, and it's very easy. You have to screen your tenants. That's where the work is up front. I know at the end of a rehab, you're tired, you want to be financed, you want to throw anybody in there, but you can't. You have to market to everyone you can possibly reach, and then you screen and get your perfect tenant. So as long as you take your time and you're disciplined to follow the rules and your strategies for screening, there's not a whole lot to manage afterwards. You just, you get most of your money from Section 8, you pay your bills, and then the tenants pay their portion. That's on automatic too. Most of my tenants have accounts and they'll pay. Some of them are old school and they want to mail it. But with Buildium, that's the software that I use. They can actually pay in store. So they'll pay in the store to pay their rent. So it is very passive as long as you get a good tenant up front. You know, they make their mortgage payment and then they can put their maintenance requests in the app, but the old school people can call, and I'm trying to train a VA to accept their calls and then put that into the management system. So there's a way to make it passive. And it's less work than managing the property managers, because the tenants complain about the property managers do the wrong thing, they make mistakes. So it's just best if you do it yourself. You got to see it as a business, a passive business.
And which software do you use?
It's called Buildium.
Buildium, okay. And
Yeah,
I have two more
if
questions.
you don't mind tech, okay, if you don't mind tech, it's not that bad, but their support team is really good. They'll walk you through everything, and they have great videos and good customer service, because I hate tech.
Sandeep, let's let Jhanel ask a question and then we'll come back to you. Jhanel?
Hey, Jhanel, I am loving your story. It's
Girl
awesome.
power.
Yes. I wanted to know, like, how do you go about finding your deals? Do you just use wholesalers? Do you find deals yourself?
So I don't like talking to people. So talking to sellers, trying to get them to sell their house to me sounds like a nightmare. So I work with a wholesaler, one person. I have one main wholesaler who knows what I like, who is good at talking to customers and making deals and negotiating. So I just use a wholesaler. I have a great relationship with him. He knows exactly what I like. He knows I can close. He knows I'm a problem solver. So I don't look for problems. I'm a problem solver. You gotta be a problem solver, and you gotta have money and be able to close quickly. So we work great together. I don't want to call any sellers and negotiate. So he does all that for me. So that's why I say relationships. I do this with relationships. But if there's all kinds of ways you can source deals, if you are good at talking to people and negotiating all this stuff, then you might be good at sourcing your own deals. That's just not my strong point. I'd rather just work with one person, a wholesaler or a realtor. You know, it doesn't, I have a couple of realtors that I work with, so it doesn't matter for me. So as long as you're getting your deals off the market, you could typically get good deals, whether it be yourself with Deal Machine or PropStream or with a wholesaler.
Got it.
Thank you. Sandeep, we're going to let you do one question. Then we're going to go to Carol and then back to you, Sandeep.
Sounds good. My other question is, do you have your properties in a single holding or multiple LLCs or individual name?
So mine are in LLCs. My first two properties are still in my name. And then I learned about getting LLCs. Now I have about 6 different ones because it's for protection, but I also don't want everyone in my business. So if you knew an LLC, you could go and type it and all the properties in that LLC will pop up. But unless you know all of them, you're not going to know all the properties that I own. So I do that for privacy, and I also do it for protection. So in each LLC, the assets are worth about $1 to $2 million, and then I'll start a new one. Now I have protection against lawsuits 2 ways, with the LLC and also with insurance. So some people will have it in their name, and it's okay as long as you have insurance. You know, you don't have to worry about people taking your properties as long as you have good coverage insurance. But I don't want people to type in my name and just see all my properties pop up. So that is why I also use an LLC.
Carol?
Yeah, I was wondering, you said your property management software is Buildium. How did you spell that?
Yeah, I can put it in the chat.
Okay, thank you.
Sandeep, your next question.
So my next question is, you mentioned you do cash advance or 0% cash advance. I mean, I have done that personally two times, and I did it on my personal credit card, and it does affect my credit score like almost 100 points. Like I generally plan, I do my whatever purchases I need to do. Then I do like 99% cash advance. It drops my credit score for a year, like 100 points. Then at the end of the year, I gotta pay it back. So initially, I think you did it on your personal card. Do you still do that, or you now strictly do your business card?
Nope, they're still on personal. My business cards don't offer 0% like my personal ones. So I have about 300,000 in personal credit cards that I use for properties. They're maxed out right now. And my score is a 680. So when I pay them off, it jumps up to a 780. So that's about right. They drop about 100 points, but it doesn't matter because when my lender checks my credit, he sees that my score is only down because of the high limits or the high amounts that I have on there. But I have 0 late payments, 0, like everything else is spot clean. It is only because I'm using my cards. So because I refinance, I pay all the cards off. They don't hold that against me. Now, when you apply for things on a computer, online, they see all this debt, you'll be denied. But when you have a person who is being the judge, they can think outside, they can reason and say, his score is low because of he's using his credit cards to invest. We're going to pay those cards off. So when I refinance, the only banks that I use are banks who reason. And you can kind of tell who those are when they ask you for a bio to try and get a sense of you. I do not get I cannot get approved with all the banks. There are some banks who will just look at me on paper and not want to approve me because of all the loans that I have. But if I go to a lender who looks at me as a person, sees that I've been investing for 17 years, knows that I have experience, knows that if they search me online, there's nothing bad about me, I can get approved because they see me as a person. So you just have to go to the right lender and work with the right people.
And what cards would you recommend?
Which cards?
Yeah.
So any cards that are 0% balance transfer, you can kind of, if you do a Google search of 0% balance transfer cards, there are websites that give you like a list of all of them to apply for. So credit cards have various different perks. Some of them have travel points. Some of them have high cash back. You want ones that specialize in 0% balance transfer offer. So I have a Citibank card. I have the 2% cash back. I have Citibank Simplicity. That is also a 0% card. I have a Discover It card. That's a 0%. Bank of America has a 0% card. And so as soon as you pay them off, like the next month, they're offering you another 0%.
Jhanel, speaking of, we talk about your course, but we didn't talk about where to get it. Can you tell us where we can get it?
Yeah.
Credit course.
I put it in the chat. And I have a list of all the cards there. And once in a while, there'll be like banks that are being kind of loose with their lending. Like right now, because the government is spurring the economy, interest rates are low. And what that means is they give us a lot of money, which means credit cards, it's easy to get approved for a lot of things. So people who are selling like business credit courses, I can get all these things for you. You can really do it yourself.
I just bought a business credit card course.
You did? No, you didn't.
Yes, I did.
Why would you do that when I have a course? Huh? Why would you do that?
I don't know. I think it was, I don't know. You can get me offline. Don't embarrass me yet.
Okay, I'm not going to embarrass you. You should go get a refund.
And Jhanel, your story is very closely similar to mine. I mean, I done those credit cards. I mean, so the commercial loan, I started that doing around 5 years. So some people call them debt service coverage ratio loans. So yeah, I mean.
Yeah. How's it working out for you? You like it?
Yeah, perfect. I mean, the credit union, basically moving with the credit union on those commercial loan, accelerated my progress very fast. So this year, my next step, I'm moving into commercial right now. And
Oh,
I
okay.
have not sold a single property. And
Yep.
I bought some flips from wholesalers. I still hold them. I bought like a $30,000 100-year-old house. It was total gut useless. The rehab was like 90K. I never rehabbed it. And guess
Mhm.
what? Last month, City of Salisbury sent me a letter. Hey, if you spend 2,500 on repair, we'll give you 10,000. So I think I'm going to take advantage of it.
Yeah, it's like they will give you money because they see you have a skill to fix up properties. People give you money, so the money is never the problem. The problem is the implementation. But you got that down pat. Which area are you in?
I'm in Charlotte, North Carolina.
Okay, and they have a
And
credit union where they give the debt cover service ratio loans.
yeah, Charlotte Metro Credit Union. I think I heard it on a podcast. They say like you don't want to be like dealing with big banks. You want to be dealing with a
Right.
small bank where you walk in and
I know you.
the top level people stand up and come and greet you.
Exactly. Yep. They know you as a person. Yep. Exactly.
Alethea, you didn't introduce yourself, and you've been here. I'm wondering if you have any questions for anybody here or our speaker. You've been quiet.
Oh, I'm sorry. I came late to the group because I just saw the email and I was in another webinar
That's okay.
for this one. And I wish I had got to this one sooner because it sounds much more interesting than the one that I was in. Um, yes, I love what I'm hearing so far, about you and your story. I didn't hear the backstory, but just from what I'm seeing, it's like I need this. I'm new to real estate investing. I haven't, done anything yet. I'm just been sitting on the sidelines and researching and reading books and watching, videos and webinars and things and meetups. But I'm very interested in doing multi-family units because I'm a veteran. I'm a disabled veteran, and in my community there are a lot of homeless veterans, and I want to be able to purchase properties that I can get under contract with the VA. They
Yep.
have a HUD-VASH program, which is like Section 8, but for veterans. And I would like to be able to, get involved with that and build affordable housing and also sober homes for veterans coming out of recovery. So that's really a mission of mine because I was once that person a couple of years ago. And so I really would like to, figure out how to get started in that. And so I will probably be looking for your course. I was already Googling it on my phone while you were talking.
Oh yeah, the Section 8 course would be great for you because I talk about the HUD-VASH program. I mean, it's the same as Section 8. So once you're certified in the Section 8 program, you could just contact the HUD-VASH people, and they have a ton of veterans who need housing. I probably house at least 30 of them.
You're muted, Alethea.
I'm sorry, I was saying I was a HUD-VASH recipient, a few years ago. And so, yeah. And so it really helped me get myself, on my feet, before I was able to move out on my own. But now I want to be able to do something in my area where it's really needed, to give back, especially with women veterans. There's so many of us, more of us homeless than there are men.
Really? I only have about 3. I don't have that
Yeah.
many.
Yeah, there's only maybe one place for homeless female veterans within the tri-state area. And so they really have a hard time placing female veterans that come in.
Really?
A lot of times, yeah, in Pennsylvania.
Oh, if
Yeah.
you tell me, like, if they're in a home somewhere, if you tell me, I'll go there.
Oh God, I'm so glad I found you. I'm serious. I'm
Yeah.
not joking about this. I know a place right now in Coatesville where women are being housed in a place, and when they take them out,
Do they have
usually
a PHA voucher?
some of them get the vouchers. Yeah, some
From
of them
PHA?
get
It has
vouchers.
to be from Philly. I don't have any
Yeah.
properties in
Oh,
Coatesville.
okay. Well, I don't know.
Okay, but I'll search it. I'll see if I can find like a woman's place in Philly.
Yeah, there's a place called the Walker House in Coatesville, PA. So you might contact them and see what they can tell you.
Yeah. Okay.
Charnel, you have another question?
Yes, I just wanted to find out, like, Janelle, like, how did you build your team? I know you said, it's about relationships. How did you build
Yeah,
your
a lot of
team?
hiring and firing. So when I first started, I didn't really know how to find contractors. I didn't really know what to do. So whenever I found someone to work on a property, I would stick it out, even though it's not what I should have did, because I didn't know what to do. So I finally got my contractor on my 5th property. So I kept trying new people. They were dragging their feet, doing this and that. Finally, on my 5th property, I found my guy. He had morals. Um, he was polite. He knew what he was doing. He was cheap. And I taught him how to get licensed and insured. And we just kind of grew together. After 10 years, he was working with me. But with COVID, a lot of us had a lot of issues. He never really liked his wife. So I guess being home with her for 6 months, it kind of ruined our relationship. And I didn't have him for the past year when I had my biggest projects. I had, like I said, 11 properties I bought, because whenever I bought to keep him busy, always. I mean, not always, but for the most part, I bought stuff even when I didn't really want to, just to keep him busy. I used to GC other people's projects just to keep him busy. So I bought these with the intention of him working on them, but he got divorced, he got depressed, went back to India, and I got stuck having to find a team in the worst time ever. My kids were home. I was trying to step out of, like, this was my last project. I'm trying to step out of the business. And when you have a good contractor who knows you, like, he knows me, he don't ask me no questions. I could just buy property and be like, go. And he knew what to do. He knows what I like. I trust him. He trusts me. Like, it made it easy. Once you have your team, it's easy. That is the part. The hard part is building your team, learning your market, getting your wholesaler, that is the hard part. But once you get all those things, it is easy. You put in the same kitchens, the same bathroom, the same amenities, go the same place and get your tenants. It's just like a machine. It's easy. So the hardest part is just getting your people up front. So what you have to do is you got to, once you notice, so with contractors, I give them a small list up front. I don't commit a whole job with them because they get excited. They start counting money before they get it. They think they're going to get the whole job. But I know, I tell them, I said, no. So you want to do this, this, and this. I see how we work together. I see our relationships. I see what your strengths and weaknesses are. And I decide if I can work with these weaknesses, or if I can't, I find someone else. So throughout this year, I still have not found a good contractor. I've been through about 4 of them with these. I only have 3 that are almost finished out of the 11 properties I bought. I've never had properties sitting like this long. I'm usually in and out of projects in 6 months. In 2020, I brought 4 triplexes in January. I was refinancing them in July. So I do not stay in properties for long. When I have my crews, we be in and out, and this is easy. But with these 11, I only got 3 done, 3 almost done. And with each crew that I've tried, they bring me a little step further. I will not stay in a relationship with a contractor I do not like. So I'm still looking. I have faith that I will find the right one. The 2 that have lasted the longest, I think that might be good if I kind of mesh them together. So you just got to you have to know what a good contractor, what they look like. For me, I do not like negative contractors who could not problem solve, because contractors who can't problem solve, they call you every 5 minutes about a new problem. It's like, yo, just paint it. You don't have to rebuild it, just paint it. So as soon as I recognize a contractor is calling me all the time, I'm like, all right, he's done. And so it depends on their price. It depends on like their crew. Sometimes they're good, but their crew is bad and they don't take accountability for their crew. So there's like all types of problems, all types of contractors. And you learn this as you go through and meet in different ones. And then once you spot your contractor, you gotta hold on to them, treat them good, pay them fairly. Don't argue over the small things, okay? Give them what they want. And what a contractor wants is a person that they can trust to pay them, and someone that will keep them busy. So you got to keep money in their pocket, and they have to trust you.
Okay.
That's probably all.
Carol, do you have another
and
question?
one more. I have
Okay,
one
go ahead,
more,
Charnel. Go
Jerome.
for it.
Just with your rental, since you self-manage them, do you have a team for that as far as like repairs, sending someone
Yep.
out so that, yeah, how does
You
that work?
have to have a good maintenance team. That is a must. You have to know where to get them, and then you have to know how to manage them. I find that the best ones are local people who you might find at a hardware store in the neighborhood. You get an old plumber, you say, hey, plumber from, this avenue, and be like, do you do late night calls? Do you work on the weekends? Do you this and that? Find out what they do, what their strengths and weaknesses are. And so whenever there's a call in that neighborhood, he's there and he'll be there for you. And then there's other guys who are like general maintenance guys. You meet them at these places too. You just kind of ask them what their specialty is, and they'll say, oh, I do everything. And because they're experienced, they know how to fix stuff. These young people, they just want to replace everything, and it costs you a lot of money. You have to know how to fix stuff instead of replacing everything. So get some older folks who know how to fix, how to work with these old houses, and not make you buy everything new, and you'll save money. And they're not even like expensive people either. So I'm trying to get my older crew to train my younger crew so that when they move on, I'll still have this knowledge. So whenever they fix, I'll be like, how'd you fix it? They're like, oh, you got to get the parts for X, Y, and Z. I'm like, all right, get the parts. Yeah. So you got to get people who know how to fix stuff, not always replace it, because it will cost you money.
Thank you.
Carol, I see you unmuted. You want to ask a question?
No, I don't think so. Not now.
Okay. All right. No problem.
Thank you.
So, Alethea, Mark asked where you were located. Where are you located?
I live in Lebanon, PA.
That's a good area to buy.
Oh yeah, they buying houses up here like crazy. Matter of fact, the pastor in my church just approached me Sunday and told me he wants to sell his house and his duplex, which is right next door to his house. And I have never done any.
Well,
Well,
here's what you do, Alethea.
Let's
You
talk
get
through
with
it.
Mark and find out how, or Jhanel, and find out how you can make an offer on that property. You get some experience.
because I don't know
How
how
much
to
do you want?
analyze. I don't know how to do none of that stuff. I mean, as much information as I have, I'm like clueless. Other than getting it under contract, I don't know what else to do with it.
Yeah,
Yeah.
so we have like a smaller audience than usual because we're changing some stuff around. But one of the things, like you missed like the introductions, and like introduce yourself, and you come here, introduce yourself, say what you're looking for and how somebody can help you. So that whatever that pastor, you might not get that house, but you can walk through that experience with somebody here. I'm also like, I'm not in Lebanon, but I'm in Pennsylvania, so I'm in the Philadelphia area. Mark has experience. He does stuff like all around the nation. He used to come to Philadelphia to help me do stuff, and you could just partner up with somebody and make an offer on that property. You might get it, you might not, but going through that experience could help you. So make sure.
Yeah.
Oh, the thing I wanted to say is make sure you put your contact information in there, so somebody can reach out to you and vice versa. So everybody has put their contact information in there one way or another. And speaking of, Jhanel, could you flash your slide one more time with your contact information so people can contact you when they want?
Yeah, so I want to say that a common problem that people have is they don't know how to analyze deals. And I say the easiest way to analyze them is just you got to make sure you're buying under market value. And the way if you don't know how to spot value, let's see, share screen. You have a good deal if it cash flows well. So you have to do the cash flow analysis. So if you can figure out what the rents are going to be, and then what your mortgage is going to be, you can figure out what the DSCR is, because I use commercial loans. This takes everything into account, how much your taxes are, how much your insurance is, your interest rate, your payment, and it has to cash flow high. If it cash flows high, which is a ratio of 1.25 and above, I teach my students that it should be 1.4 and above. A lot of my properties are 1.7 and above, just to give you an idea. The ones that I'm refinancing out now are 2. So you want to always get high cash flowing properties. If it's not already high cash flowing, you can do things like add bedrooms, add units to make them cash flow more. Just make sure you don't spend more than what it's worth. So do a cash flow analysis. And if it cash flows, it's a good deal and you should buy it.
Jhanel, could you tell us what DSCR is?
Yeah, I'm gonna do like a Google search because it's a video that I show. Because that's better. Listen, one person can't be your only resource. You got to be able to go to various different resources to get your information. Books, YouTube. You know what? I'm going to drop in here the YouTube video about DSCR and a book that I really like that talks about value and risks.
When you writing your book?
Soon. After I finish all these projects, I already kind of have the framework in my brain. I gotta get it out there. It's going to involve how to invest. Well, forget it. But I talk about the inefficiencies a lot. You gotta be in the game to spot them and to take advantage. Does anyone have any more questions?
So besides a handyman, etc., do you have any assistant or any other employees?
Yeah, because of COVID and my kids are home, I did hire like an in-house property manager. Oops, hold on. I'm training her on how I manage my tenants and on the systems, and she's doing okay. She's not that good at reading people yet. I've realized it's a skill that I have. So she's not able to see if someone's a good tenant or not. You know, you cannot just look at someone's income. You really have to be able to read them as a person, which I've learned. Like, this has been a really good learning experience. Me trying to transition into passive investing. I'm really learning what it is about me and my processes so that someone else can repeat it. So I've been super analyzing what I got going on. Let's see, where's the chat? All right,
So yeah, you can stop sharing. One of the things that like Mark taught me, Mark was my first ever real estate mentor, is that you got to bring value to other people. Sometimes people get on and they want to learn like all of this stuff and they want to like pick somebody's brain or something like that. And like a lot of it, you know, sometimes these professionals are busy. They don't have that time. So my question to you, right, as an example, let's just say I was a Lethe and I wanted to learn how to analyze this deal. How can I bring value to get how can I bring value to you in order for you to help me with something like that? And it could just be like money, like a consultation. What's your perspective? How can I bring value to you to get your help in analyzing a deal or have some time with you?
I guess I had to see, like, I don't know. Okay, so analyzing a deal, you know, looking at the ratio is just one part. You have to know how to evaluate how much a renovation is going to cost, and that is depending on who is doing the work. So it's just so many variables involved that it just can't be talked through one consultation. You have to already kind of know something in order for you to get some value out of one consultation, because you're just going to have more questions.
So how do I get there?
I mean, I do have a mentorship that I offer, but it's intense, and it's because I know that the buy and hold strategy, you really have to know so many parts of it, like how to buy, how to analyze, how to manage, how to deal with this when this goes wrong, how to deal with that when this goes wrong, and there's strategies to every single step. So to be the most successful, it's best to know the best strategy, and it comes with experience, someone else's experience, or your own.
Okay. I think Mark, you have a question?
First of all, I'd say fantastic. You are a boss woman here. You are Amazon queen badass all the way around. Man, I just love how smart you are. I love how aggressive you are. I love how you're just a role model for other women. We need so many more women like you to lead the way.
Oh, I'm gonna cry.
I just love it.
Thank you.
Just love it. And I think
Amen.
anybody here, you need to reach out to her, you need to talk to her and see if you can work with her, because man, she knows her stuff. Very impressed. And the question I had real quickly was regarding that first contractor that you really liked, the Indian guy.
Yeah.
How did you find him?
My electrician that I was using at the
Referral.
time. I got my electrician through a plumber. I got the plumber through the very first contractor on my first job who screwed me. So it was a whole line of referrals, just going from person to person.
Yeah, but a lot of time, so the thing that I found is that I really focused on those referrals, but I pay attention. It's a small network, and
Yeah.
all the good people know the good people, and the bad people know the bad people. And that goes with, if you can build those relationships with everything from realtors to lenders to other investors, and say, well, what about Joe Schmo? Oh, I'm not going to say anything bad about Joe Schmo, but
Right,
you better
but-
check him out, man.
Yep.
Okay, thank you. And then I go like, roofing. I mean, there's like supply houses, and I go to supply houses and I say, who's one of your top vendor contractors here that, he's got good line of credit, he pays his bills, he's in here, he's
Working.
and again, I say, just give me your top 3 to 5 guys, because a lot of time they don't want to do favorites with one, but and also I'll say, when do they come in? The other thing I found is sometimes I'll be at a Home Depot or Lowe's, 6 a.m., right when they open. And I see who's there. He's got the good truck. They're very clean, very organized. They're on top of their game. Why? Because they're going to have everything loaded up and be at the job site at 8 a.m. or before, ready to knock it out. So the people who are early, they're prompt, and all that stuff about the screening. I treat my screening of my contractors and my tenants fundamentally the same. I test them. I test everybody.
Yep,
Yeah,
me too.
absolutely.
What happened when this happened? And I see how they reacted. It's all about how they react and how they treat things. Yep.
And I'll say thing now. I'll tell them right up front. Now, here's the deal. The last guy, he broke his agreements with me. So when you arrive at the site, you say you'll be there at 8 o'clock. If you tend to run late, you better leave early. And as soon as you get to the site, I want you to take a photo of the house, and I want to send you a text. Send me a text that you're there. You don't do that, you're fired. Are we clear? Simple stuff. It doesn't have to be complicated, but I test people and because they lie. I mean, second nature. Drink a lot of alcoholism, and it's like 80%. It's the 80-20 rule. There's 20% are good, 80% are like, you wonder how the hell they stay in business. Because they just lie and cheat and steal their way. Yeah, scam and it's like they're trying to get as much, I need half down, that's normal. Right, But you've been in business for 20 years and you're successful, and you need half down because you're trying to get my money to finish the last job. Yeah, all the games, those scams, and so. Yeah, well, I'm really impressed. Go ahead,
Sandeep. So we have about 7 minutes left before we close out. Sandeep, I see you have your hand up, and then Alethea, you have your hand up.
I'm gonna give a quick question. So,
yes.
How do you treat your tenants, like friends, families, or strangers, or it's like?
I treat them like clients.
To be a property manager.
Yeah, I treat them like clients. I give them a good service, which is a house that has heat, hot water, safe and secure. And if they have a problem, I fix it. If it's like a serious problem, I fix all those immediately. I tell them cosmetic things. I usually fix it if there's in conjunction with, other main problem. And they understand that. So I give them good service and they pay me for it. That's pretty much it. I find that most of my tenants, they just want a warm place to sleep and someone who knows that they care or feels like they're respected. So I treat them like clients. I'm not going to say we're each other's friend. We both in a working relationship. They understand I have bills to pay. I understand that they need their place to work. So it's just like a mutual understanding.
So you present yourself as the owner, or you present?
Yeah, I don't play those games. I'm like the best at talking to them for some reason. I have just learned all the right things to say in every situation. Everyone is just like, I never would have thought to say that. And it's just like, you validate their concerns. If there's something that you haven't addressed, you tell them what you have done to address it. And like, if there's something I haven't done yet, I said, if you can do something to like help me along, I will take care of it quickly. Like I recently had a tenant who was upset that the paint is peeling on the outside of a bay. It's like old wood, it's chipping. My maintenance crew, like I said, they're older. They don't want to carry around ladders. They don't want to go up there. My roofer, everybody's crazy busy. Other people who I've tried to get estimates from, they want to just replace the whole thing. I'm like, no, I just want to fix this one part. And so she texted me yesterday. She's like, I told you about this problem back in May. It hasn't been addressed. It's about to be the holidays. And I say, listen, I'm sorry you're dealing with the eyesore. I have got estimates that range in this amount. If you know someone who can do X, Y, and Z, I will send them out there. And she said, oh, you don't care about your place. You know, I don't live like this. She's actually a new tenant who my assistant placed. And so she's not really even the kind of person that I would rent to. And I said, it's not that I don't care. It's just not a priority. I said, I prioritize things like heat, hot water, and safety and security. If it's not like that, then I don't prioritize it. I will do it at the same time as I'm doing something else. This takes a certain person who has these specialties of being fit, who can carry a ladder, who has help. I cannot get that person together for a reasonable price. So that is why it has not been done. If you know someone, let me know. So this is like a certain way that you got to talk to them. They want to feel like they matter. They want to feel like they're addressed. They want to feel like they're respected. So if you give them that respect, and you kind of give them, you know, what they want, as long as it's reasonable things. She wants a lot of unreasonable things, in my opinion. It usually turns out to be a good relationship.
What about
Speaking,
non-paying tenants? I mean, do they misuse you knowing that you're the owner? Non-paying tenants, tenants not able to pay rent, etc. Evicting tenants directly.
Yeah, they know I'm the owner. Why does that change things?
I mean, like, personally, in my experience, I've seen like when they know you're the owner, they're like just one extra day. I mean,
So
sometimes.
you're in control. You're in control of
yes.
all of that. You set the like the rules. You set the boundaries. They don't have. I like real estate investing because I have control. I have control over my contractors, my tenants who lives in my house. If I don't like you, we dissolve a lease. I file for eviction. I pay you to leave. So no one has control over me. If we don't get along, I get rid of tenants. I do not keep bad tenants. You cannot stay in this business if tenants are getting on your nerves. If you got a property manager, they're going to get on the property manager's nerves. And it's just not good. You just got to get rid of the tenant. So I don't keep bad tenants. I get rid of them and I put someone else new in.
Speaking of Jhanel's Instagram, her if you follow her, she's got some really entertaining stuff on her Instagram, and she
Yeah, I
posts
didn't
some of her
place
tenant
any of those
stories
people
too.
either. The
So,
bad tenants, I didn't place them.
Alethea, I see you have your hand up. You want to ask a question? We'll let you ask your question. We'll kick it to Jhanel for any final words, and then we'll let Mark close it out. Alethea?
Okay, I just wanted to make a comment, I guess, to piggyback on what Mark had said about building relationships, I guess, and being in this, and she said about being in the spaces where these people are, what he said. So I joined, over the past few months, I had joined several Facebook groups of contractors, property preservationists, plumbers, inspectors, just getting in conversation with people. And over the summer, I actually took a job at Lowe's home improvement store just to be able to get in close contact with contractors. I would literally stalk them down the aisles and follow them to their cars and help load stuff, just to get conversation and talk about, their projects and what are they working on, what are they doing. I have a startup business, which is property preservation. And what I do is post-renovation cleaning for investors in the area who are buying up properties and flipping them and selling them. I get in there and meet these people and get information from them as well. And I have several little books that I use for realtors that I talk to, for contractors that I've spoken with and gotten their cards, electricians, inspectors, anybody that I feel like will help me. I guess that's part of building your team, weeding out these people and finding out who you vibe with, so that when I do start investing and doing what you're doing, and hopefully one day be where you at, I would have a good team, to help me. But in the meantime, I'm just networking. So this is just my way of doing it.
Okay, so what is actually stopping you from buying? Because I'm hearing a lot of, it sounds like you're distracted to me. It sounds like
Yes, it
you're doing
is.
all these different
I'm doing a
things.
whole lot of busy stuff, and that's the problem, analysis paralysis. And I wanted to ask you, how do you get out of that? Because I need to really jump in and just build the parachute on the way down. Because
Yeah.
right now I'm really holding myself back, and I know that's what's happening.
So, I mean, you're dealing with uncertainty. You've never dealt this before. So you're trying to get as much information as you can so that you're prepared. But you're getting a lot of like not useful information. The information that you really, really need is how to analyze a property, and I told you what to do. So you need to so what I tell people is you get something that's a cosmetic rehab. With a cosmetic rehab, you don't have to estimate something huge. You know, anyone can kind of do your cosmetic. You can find someone to paint your cabinets. You can paint the house, clean it, get the tiles reglazed. You know, don't rip out anything. You know, just do a cosmetic rehab. It's very, very low risk. With that, you can experiment with different contractors. Tell them, I just want to paint. I just want to do this. I just want to do that. You can get anyone. You can get someone that load. You can get someone off of Craigslist. You can get someone's uncle. You can go in there and paint. So get a cosmetic, okay? So you're not spending a lot. You don't have to, you don't have all these unknowns, okay? Get a cosmetic renovation and just make sure those cash flow numbers make sense. If the cash flow numbers make sense, buy it. Buy it. Okay? Just pull the trigger. Buy it. You're protected with cash flow. If you do Section 8, you're even more protected. You got the cash flow that's going to pay the bills. That's going to get you money. You got to get your first property so you can get the perspective, so you know it's actually not that hard. No, you don't know it's not that hard yet because you're doing all this research and you're getting too bombarded with stuff.
That was very helpful. Thank you. Mark,
Yeah.
Charles hopped off, but Mark, do you have, well, actually, Jhanel, do you have any final statements before we close out the meeting? Give us a gem. Mindset.
I just
Got
really
anything on mindset?
No, I really just want people to get their first property, and you'll really see, you got to get that perspective. You got to get the foundation to really realize it's not as hard as you think it is. Even if it is hard, if it's a buy and hold and you make a few mistakes, you get something that's not a huge renovation, you can bounce back easily. Okay. My first property, I paid too much for it. I did. I went through a lot of problems, but guess what? I'm still making money off of it. I was introduced to real estate, and now I've retired for 10 years. I've retired many other people. You really just got to get your first property and get the perspective, start networking. Because once you just know things, you just see it so much more clearly. You be like, I was overanalyzing like crazy. It's really not that deep. So you just got to get your first property.
Mark, let's let you close it out. And also, Mark, I'm put a little pressure on you because we're working on like mentorship from you. So can you talk about your mentorship that's coming up, your 21-day challenge stuff, and then close us out, please?
Yeah. I've offered in the past a real deep discounted special where I've done 21 days intensive for like $750. But in May, I said, I'm going to go crazy. I'm going to do 21 days for $21. Now, it's not quite the same. It's $1 a day, for God's sakes. It's the price of a pizza, for God's sakes. Now, I've got a free group and I got a paid group. The free group you can join through Facebook and you can post. There's other people in the group. We got over 100 people. Some other people will answer your questions. I can answer your questions. But you've got to stop overthinking. You've got to go ahead and get a property and get the numbers and post. What's the ARV? Doesn't have to be perfect, as close as you can get. Here's what I think the ARV is and why. Here's what the repairs are and why. Here's why I think it's the deal and why. And you've got to get, like, the rubber's got to hit the road. So that's why I got a free group and I got a paid group. The difference with my paid group is I'll do a Zoom with you with your deal, but it's group. So everybody benefits. And then if somebody can't make it, they're at work or whatever, we take that Zoom and we post it. But basically, again, when you're brand new, I say, listen, relax. You're being too hard on yourself. You're new. It's like riding a bike. You're going to fall. It's part of the process. Get over it. Just skim your knee. But just don't start at the top of a hill and kill yourself. Use some basic common sense here.
Yeah, no
but
total
the point being, and just figure out whatever you've got to do to overcome your fear. And that includes get very good at marketing. Find somebody else who's like, oh my God, I got this full-time job and I need to get this house painted. They already bought the house. You go ahead and offer to help be the general contractor and oversee. If you've got flexible schedule, just put that out there. Hey, you need your cosmetic, I'll help. What are you going to charge? Just reasonable. I mean, just get the damn experience. Get over yourself. Just frickin' do it. Okay, that's number one. And just stop making excuses. You got to stop living in the past. You got to live in the present, move in the future. Everything's mindset, and you got to work on your mindset every day. And you got to read and study and habit. And it's just, you got to make a decision. You got to make a commitment, because you're losing time. The biggest, one of the great quotes is, we think we've got forever. You don't. Her 17 years went by so fast, and I'm so impressed that she had bigger cojones than most men I know. And just, I'm just going to figure it out. I'm just going to do it. You got to think like she does. How can I be more like her? You need to surround yourself with sisters who are like-minded, but are all positive. We're like, we're going to do this. Build a team of other people. I mean, they're out there. They're all around. There's like 10 people like you. They're all thinking the same thing, but you need to get yourself built around one like her. And then you follow. Okay, here we go. Like a bunch of lionesses. And nothing's freaking going to stop you. But it's mindset is the biggest obstacle. And you just got to get, you put a property, you get educated, basic education. You put a freaking property under contract. Right now, there's so many freaking buyers that can't find deals. Just flip the first deal. Oh, I made $3,000 to $5,000. Yeah, look at what all you learned. But just get something and flip it. Get the right people on your team. In the whole valley down to Harrisburg, there's a guy, got a great group. But you don't just come to the meeting. You got to reach out and talk to her and talk to Jerome and talk to me, especially anybody in Pennsylvania. Talk to them. Reach out to me. We'll make time. We'll talk to you. We're not going to give you 2 hours, but we'll give you 15 minutes and point you in the right direction. You see how much time we give tonight, free. So thank you. We'd love to have you on again. You were great.
Thank you.
Great. And we have maybe you have come back and sell your program on Section 8 or whatever. We'll find out more of whatever programs you got. But the thing is, and again, if you're part of any of these meetup groups, we appreciate if you post a positive comment so other people read your comment, because now it's coming from a fellow member, so I can get more people to pay attention and to participate. But you see how much value, and it costs you no money, just your time here. We should have had so many more people here tonight. So we'll be working on that. So thank you, everyone, for being here tonight, and reach out and connect with people. Do it in like the next 24, 48, 72 hours at the most, because otherwise, boom, a whole week goes by and there's no time for hesitation, procrastination. Do it now. The moment you get off this, go ahead, start reaching out to people tonight, now. All right.
Thank you, Mark. Jerome? And that's perfect. And I just want to say, for most should know already, but Mark was my first mentor. He kicked my behind and got me into gear. And he did not charge me $750. It was more than $750. And it's not. It was a lot to me.
That's a 21-day trial. You did the full 3 months. Yeah, I got a client just paid me $3,000 for 3 months in Houston. So okay. I'm kicking his butt for $3,000.
All right. Yeah. So Mark, I appreciate you. Jhanel, thank you so much for doing this for us. And for our members, I promise we will fix the attendance. We are restructuring and we will have a lot more people next time. The positive is that you got to have a more intimate conversation with our speaker. So we'll see you all next week. Bye-bye.
Bye.
Bye.